Shut up and sit down.
And now, streaming live from the sunny Southern California coast, this is Options Uncensored.
Hey everybody, I'm Steve. Welcome to Options Uncensored. We're making real option trades in real time together. Let's get right into it. First things first, make sure you have your brokerage account open so you can follow along. Have your YouTube video quality set as high as possible. That way you can read the numbers a whole lot easier. Have a calculator on hand so you can do some easy math. If you have a question or stock you want to go over live, leave it in the comments section below and we'll go over it together live. Finally, remember this is not financial advice. This is all for entertainment purposes only. All right, welcome back everybody. Hope you had a great holiday weekend. We've got a short week this week and a short week next week. The difference is though this week is going to be very quiet with not a lot of news, but next week should be pretty interesting, okay? Let's look at our open positions. Everything here, we have nothing but short call spreads with January expiration. January expiration is a couple weeks out here, so we're getting close. TLT, a little bit flat today, up $10 on this one. So far, so good, trying to get to 19. Dow Jones down very slightly, not bad. Roku, we rolled this one from December expiration to January expiration. We're on the right track, got some work to do, but no worries here. Same thing with SPY, we rolled that one. A lot of work to do on this one. Both our legs are underwater, but again, we can just keep rolling this one until it comes back down. IWM, XBI, same thing. We got some time. If we need to, we can always roll these, okay? There's not a lot going on today, but there are some things making headlines today. So let's check in with Bristol Myers first. BMY. So they made an acquisition deal last week, and they announced another one this morning. Acquiring Raise Bio, I don't know this one, in a $4.1 million deal. Okay, so we'll check out this one first, and then Raise Bio afterwards. Here's our chart. Not a great looking chart. Okay, we are now only trading February expiration, no more January. Okay, so anything we open that's new will now be February expiration. On the put side, if you sold 46 and bought 43, got good liquidity here. Look at the 43, 1,000 contracts today. So it's definitely action happening on the put side. If you sold 46 and bought 43, that's 54 minus 24, divided by 2, divided by 300, 5% on the nose. Excuse me. Considering this is Bristol Myers, 5% on the put side is not that bad. Call side, you'd have to sell 57.5 and buy 60. Does it beat 5%? 35 minus 16, divided by 2, divided by 250, 3.8. So you're getting paid more on the put side. Not bad, actually. You're going to mark this one. Let's take a look at RYBIZ. RYZB is the ticker. I don't know this one. Raise Bio. So there's going to be nothing to do on the call side. There aren't enough strikes available. But here's your chart. Cool. They've only been public since September 15th. So a good buyout bid from Bristol Myers. Nothing we can do here though, okay? Moving on. Intel is in the news. They caught a bid from whom? The government, maybe? Intel stock rises on confirmed investment. Oh, Israel. So Israel is doing a deal with Intel. So there you go. That's why it's up today, 3%. Earnings are January 25th. So there's the problem. Since we're now only trading February, in this price are January earnings. So it's going to increase the volatility. We are exactly 1 month from earnings, so there is some time to get in and out. But if we get into a pickle, we may have to hold through earnings, which I don't prefer. Okay? Let's look at the chart. Nowhere near an all-time high. Could catch resistance around, I don't know, 50. This is a tough one. I wouldn't do this one. What does the put side look like? If you sold the 42 and bought the 38. But remember, you're holding through earnings. We'll skip this one. Moving on. End phase, ENPH. Earnings are February 6th. This is a solar stock. It's been up a lot since the October low. 75 to 134. That's a big move in just 2 months. It is approaching its 200-day moving average and should catch some. It caught a ceiling here at 112, which makes sense. You have this resistance. Next one up is 152. So coming up at 152 and 147-ish, we've got the 200-day. So there's some resistance coming up. You'd want to sell the call side here. Getting close if you sold the 175. 175 and bought the 180. That's 467 minus 402 divided by 2 divided by 500, 6.5% there. We're close on this one, but no cigar. I'd wait just a little bit more. Once it gets to around 150 or so, then I'll open up a call spread. We're close, not yet. I'll write down 150. Next will be Expedia. No news on this one specifically. We just have seasonality ending. All the travel stuff is coming to a close. Not a lot of people travel in January and February. So this gap up after November earnings and just a rocket ship up like the rest of the market. These kind of parabolic moves are unsustainable. So there will be a pullback at some point. My guess is sometime in early January. You're going to hit a lot of resistance here between here and 176. Call side for February. Not hardly any volume here, so it's going to make the liquidity on this one a little bit tricky. $0.12 spread here. 15-cent spread here. Not ideal. Earnings are February, so this one includes earnings as well. I think we'll hold on this one. See if there are better opportunities. Illumina. Earnings are February 14th. So we got some time. Could be catching a top here. Maybe a small pullback. If not, next is all the way at 158. It's got good volatility, though. That's what's interesting about it. For February, on the call side, too illiquid. The 170, you'd want to sell the 175, and it's a $2 spread. No good. Moving on, Walgreens, WBA. Good liquidity on this one. Earnings are January 4th. That's why. So we have earnings. What are earnings? Not this week, but next week. So that's why the IV is so high on it. We'll wait till after earnings. If there's a big move in either direction, then we can make a move, okay? Next up, Caterpillar, CAT. Earnings are at the end of January. The only reason I've got this one on the list for today is the same thing. The big move up and another continued big move up today. Approaching all-time high, or is that an all-time high? It's at an all-time high. Call side. If you sold 330 and bought 340, got a 13-cent spread here. Let's do the math really quick, see if it's worth it. $2.29 minus 126 divided by 2, 5.1%. Okay. That's okay. Let's move on. Royal Caribbean, RCL. The cruise lines have done very, very well this entire year. I don't know if that'll hold true for next year. Earnings February 6th. We got some time. Here's our chart. Same thing. Big move up here in the stratosphere. We don't have a lot of volatility in this one, so it's not going to be, the option pricing isn't going to be, quote unquote expensive. Not a lot of volume either. If you sold 145 and bought 150, 220 minus 144 divided by 2 divided by 500, 7.6% there. Now that's interesting. Where's 145 on the chart? 145 is way up here. All right. Earnings are February, early February. So we got some time. Liquidity on this one? 145. It's okay. Got a 9-cent spread here, 6-cent spread here. I kind of like this one too. We'll put a note and come back to it. All right. All right, since there's not a lot of news today, let's follow up on some ones we were following last week. First up is NetEase NTES, up 6% today. We've got earnings at the end of February. That's what it was. We're going to take this one off the list. So we had big gap down here on the 22nd, rallied back, and it's rallied back again today. So the move on this one's already been made. You don't have resistance now until maybe 96.5. Any news? China. Skip the call side to a liquid. Put side. 75. It's to a liquid as well. Not enough volume, not enough liquidity. Okay? Taking this one off the list. Next up is Amgen. Okay. Earnings are end of January. They had the cancer drug come out, their news last week. This one's tough. You've got an ascending line here of lower lows, and you have a descending line of lower highs here. So this could be part of the lower high with the next move down. Look at the call side here for February. Liquidity's okay, considering there's no volume going on. If you sold 310 and bought 315, 179 minus 125 divided by 2 divided by 500, 5.4%. So that's not bad. It's actually better than Bristol Myers. Where's 310 on the chart? $310 is up here. Kind of like this one. $310. Okay. Earnings, February 30th. So we got a little bit more than a month here. It's interesting. Just if it moves against us, we'd have to hold through earnings. And that's something I'm not crazy about doing. We'll hold on this one. Next, Moderna mRNA. Earnings are at the end of February. Great, we got plenty of time. Here's our chart. We're going to get resistance between 97. Oh, here, 97. Between 97 and 100. Let's look at the call side for Moderna. If we sold 120, bought 125. 216 minus 165 divided by 2 divided by 500, 5% there. So not that great. Liquidity's okay. I wish it was better. We'll keep it on the list. We'll keep watching. All right. Next up, the TLT. We're already in this one. Been in for a couple days now. It's moving fine. It looks like, and don't quote me here, it looks like it could be topping out for a small pullback. We opened on the 20th, a short call spread. It's moved down slightly. It's in our favor. It's up slightly today, but if you want to open something on the call side today for February, ours is January expiration. Here are my January strikes, shorting the 103, buying the 106. For February, though, if you sold, 105's awfully close. Sell 105 and buy 110. No, buy 109. Sell 105. That's 79 minus 37 divided by 2 divided by 400, 5.2%. That's not bad. We're trying to get 19 for 300. I'm getting a 6.3. And when this fills, we'll get a 6.3% return on the $300 spread. Okay. Next up, Etsy. Trying to look for move to 100. Earnings are at the end of February, so we have plenty of time. We had the layoff news last week, hitting the 200-day. I'd wait for this one to get to 100 and then sell a call spread. Hold on this one. All right, let's check in with Affirm. Up 3% today. So this is a buy now, pay later play. And once the holiday season is over, I don't know how sustainable this straight line up parabolic move can be. That's all. Resistance here from back in 2022. Next one would be here, 72. If it breaks above here, we got a big gap to fill, 72. Call side, Jan for February. We sold 70 and bought 75. That makes sense. Good spread, good liquidity. 259 minus 199 divided by 2 divided by 500. 6% on the nose. Seems very fairly priced. Up here. Wow, that'd be one hell of a move. I think I'll go ahead and open this one now. For February, 52 days to expiration. When are earnings? February 7th. Okay. We got plenty of time. Just know that this expiration for February includes some earnings volatility. Okay? But I think we got some time. If there's any pullback, this will get filled, okay? It's worth it. So I'm gonna sell the 70 and buy the 75, okay? Verticals with the 5. Here's our 70.75. Gonna sell one February 70 call and buy one February 75 call. $500 spread. Go ahead and go with the ask of 63. Receive a credit of 63. We'll preview this and check the ticket. Sell one affirm 70 call to open. Buy one affirm 75 call to open. February expiration. Receive a credit of $63. We'll go ahead and send this one out. Hanging out here. If it gets filled, we'll set a buy to close order, good till canceled, for $31. 31 divided by 500, that's 6.2%. Okay, cool. Moving on, let's look at gold. Gold and Newmont. GLD first, up very slightly. We're not going to get a lot of news on interest rates or any of the commodities like gold until we have more economic news, and that won't come out till January at this point. Volatility on this one, okay. Call side, I think I said it a couple times last week as well. If you want to sell the call side in gold, wait till it makes an all-time high again and then sell the call side. I don't know if I'd sell it now. February, you'd have to sell 200's a little close, but you could sell 200 by 205. 157 minus 87 divided by 2 divided by 500, 7% there. That's pretty good. The 200 is awfully close. If you sold 205 and bought 210, that's pretty far out though. Let's check it out. 87 minus 50 divided by 2 divided by 500, 3.7. I'd skip gold for now. Selling the 200 is too close, and selling the 205 is too far out. Put side is 2. You don't get paid for the put side. Newmont, NEM. Trying to get it to 44 to sell a call spread. It's not there yet. Earnings are at the end of February. We're going to move on. If Newmont gets to 44, then we'll go ahead and do something. Boeing, let's catch up with Boeing. Looking for Boeing to get to 293. Earnings are at the end of January. So actually, just because earnings are so close, we're going to hold on Boeing until after earnings. We had this big move up. It looks like it could be topping out. It's taking a break for sure. Maybe a small pullback. However, earnings are too close, less than a month away. Next, FedEx, FDX. So, missed the move on this one actually. Had its gap down after earnings. Hit the 200-day perfectly, right on the nose, and it's come rallying back. So if you sold puts or sold a put spread, you're probably out of it this morning for a win. Let me miss this one. That's okay. I don't think they were paying that well, that's why. Put side for February. You'd have to sell 230 and buy 220. 174 minus 88 divided by 2. That's only 4.3%. So that's why I'm skipping this one. I don't want to sell the call side here. I'm going to go ahead and take FedEx off the list. Finally, the KRE is next. Waiting for the KRE to get to 56. Should hit some great resistance at 56. I'm getting close. We're not there yet. Okay? Hopefully sometime in January. All right, let's check our IV rank scanner, and we'll sort by volume. Got about 5 more minutes or so, and then we'll call it for today. Very quiet week. Not a lot going on. Tesla's got some volatility. 38 IV rank. And just by the looks of it, it's got this channel that's breaking out to the upside. So that's something to keep in mind. Earnings, January 24th. Too close for that one. Okay? NEO. IWM's at 64. We got my January spread. Sold the 197 and bought the 200. Or underwater, but again, this one would be very easy to roll. And if it pulls back even a little bit, we'll be good. We got some time. Here's our chart. Same thing. I'd still sell the call side. It's breaking out here. It should catch resistance. You see how back here, this resistance from March of 22 is acting as a ceiling here. For February, call side. If you sell 219 and buy 225, $600 spread there. That's 160 minus 86 divided by 2 divided by 600, 6.1% there. That's not bad. We're trying to get 20 for 300. Thinking same thing. So not bad. If I wasn't in this position today, I'd open it again. All right, moving on. Marathon Intel, we've already gone over Intel today. They do have a meeting on January 8th. CES 2024. See how Intel Core Ultra Processor powers the newest AI PCs. Hosted by Marcel Johnson, blah, blah, blah. 1. Great. Microsoft. What if they have earnings coming up? We do have earnings season starting in about 3 weeks or so, early to mid-January. We'll have the banks kick things off. So we do have earnings volatility being priced into a bunch of stuff. And we have January 23rd for Microsoft's earnings. So we're too close to earnings at this point. We're less than a month away. So you'll start seeing, that's the reason why it's on this list, because it's going to start pricing in earnings volatility. Okay? We'll skip it. Coinbase on a tear as well. All these businesses that don't make money have just been running up because of anticipated Fed cuts. Same thing, just a straight up parabolic move, which is unsustainable. Earnings are February 20th, got plenty of time. The reason this one's tough is just because it's very illiquid considering the price and the volume. You'd have to sell for February expiration. Sell the 250 and buy the 260. We just got a 30-cent spread here. 25-cent spread here. I'd pass. Riot, SoFi. Bank of America. So Bank of America has earnings, I don't know, January 14th or something like that. January 12th, even closer. So like I said, all these option prices are going to start pricing in volatility. Yeah, January is slightly higher than February. But I don't want to hold these during earnings reports. So we'll wait after the banks report and see if there are any big moves that aren't priced in. Then we'll go ahead and open something up. Okay? Blink? No. GDX, stick to GLD. You get paid more. Citigroup has earnings on the 17th. Robinhood, PayPal, no. Enphase, we already looked at Enphase. Interesting. We're going to wait for Enphase to get to 150 and open up a call spread. Walgreens, we already looked at Walgreens. Earnings are January 4th. Affirm, we have our ticket open for Affirm. Pfizer, earnings at the end of January. We got, 5 weeks here? Interesting, maybe. Gold, we already looked at gold. Like I said with gold, wait for it to hit another new all-time high, and then we'll sell a call spread. Not yet. Tilray. ARK, nope. Actually, let's check out ARK for fun. ARKK. I've traded this one a couple times. It's an ETF, so there are no earnings to worry about per se. It has had a nice move up like the rest of the market. It could be catching resistance here from back in March of 2022. If not, the next stop is right around 58, all the way up to 64. Put side, if you sold 46 and bought 42, that's $400 spread. You don't get paid for it though. 73 minus 30 divided by 2 divided by 400, 5.3. That's okay for an ETF. It's not great. Call side, if you sold, wow, right on the nose, 62. Sell 62 and buy 66. 83 minus 42 divided by 2 divided by 400, 5.1. So you get paid slightly more to sell the put side, but that's because you've had such a move up here. There should be some pullback, even though it should be small. There should be some pullback in the next couple of weeks here. It's gone from 33 to 53. Big move. Okay, moving on. Anything else? We're almost done for today. Zim Exxon. We must have earnings coming up for Exxon at the end of January. I know oil's up big today. Earnings for Exxon are early February. Okay, that would be included in these earnings, or in the option price. Let's look at USO and XOP, up 2.5% today. Oil. Shenanigans going on in the Middle East with the Houthis and the Red Sea pass. No clear direction here. We've got the obvious downward trend here, so that could warrant us selling a call spread. But we do have the longer term, this trend line, very strong trend line. Lower lows all across the board. This could be the next lower low with the next leg up. Hard to say. We sold a put spread in XOP back here in early to mid-December, and we're out of it, made our money. So that was the move to make. There really is no clear move to make right now. If you were in on that XOP trade, you remember it happened back in what? I think it was December 7th maybe, and we're out of it. Kind of in no man's land right now, so hold on this one. Anything else? Silver, stick to gold. Boeing, we already looked at Boeing. GameStop. Unity, no. Upstart. We'll take a look at Upstart, then call it for today. Interesting. We traded this one back during that sell-off after earnings. Somewhere in, August, I believe. Made our money. I haven't traded it since August. Earnings are February 14th, 13th, sorry. We got plenty of time here. But I think this, if you're trading February options, February expiration, that is included in the earnings. Earnings are included in the price, yeah. See this big spike here for February. Well, we do have time. Call side. Man. A lot of skew here. If you sold 65 and bought 75, that would be $1,000 spread. 287 minus 194 divided by 2, only 4.6. It's not worth it. These numbers are a little off. Maybe the put side then. Yeah, these numbers are way off. If you, a lot of call skew. If you sold 25 and bought 20, 76 minus 29 divided by 2 divided by 500, 4.7. Got a crazy amount of call skew. For example, if you sold the 70, you'd want to sell the 75 on the call side, you get paid $192. Same strike on the put side, you get paid $76. So there's a ton of call skew here. What if you sold 75 and bought 80? 192 minus 162 divided by 2 divided by 500, 3% there. Man, this one's wonko. Pass on this one. All right, I think that'll do it for today. Have our firm call spread open, looking to get 63. If it gets filled, close the buy to close order on the short call spread at 31. We'll keep that open until it gets filled. All right. If it doesn't get filled, no worries. TLT is looking good today. Everything else is kind of just flat, slightly down. But January expiration, how many days do we got? 24 days to January expiration. By the end of this week or by the end of next week, we'll make a decision whether if these close naturally, great. If not, we may have to start rolling to February expiration, okay? But we'll cross that bridge when we get to it. We still got plenty of time till January. And a lot of these will be very easy to roll just because they're big, like the DIA, the SPY, all these are big ETFs that have great liquidity, okay? So don't worry about getting into a jam. We'll be able to handle it. All right, cool. Thanks so much for watching, everybody. Tune in every morning, 7:15 a.m. on the West Coast and 10:15 a.m. on the East Coast. We go live every morning trading options. Also tell your friends who are trading options to tune in as well. Like and subscribe. You'll get alerts when we go live, okay? Thanks so much for watching. We'll see you all tomorrow morning.